Right now, I often get asked, should I buy a house or should I buy a house in 2023? And my answer typically is no. Most people, when they normally buy a house, take all of their savings and they get pre-approved, and then they buy the nicest, most expensive house possible, and then every single month they have a mortgage that they can barely afford, and then they have to cling on to their job in order to be able to make those payments. And that is really dumb, but it's the American way. What's up, guys? My name's Avery. I love investing in real estate and talking about personal finance on the internet, which is why you're seeing me right here. And in today's video, this won't be a rent versus buy video. There's many of those out there, but I'm going to be addressing as to why right now is a terrible time to buy a home and why most of the time it is a terrible time to buy a home. So if you're interested in learning more about that, watch through the entire video. But before you do that, definitely scroll down and make that thumbs up button blue, and I'd really appreciate it. Most people view buying a home as the largest investment they'll ever make, the largest asset that they'll have, and it's because most people don't know what else to do. Most of the time, homes are just a glorified savings account. And right now, getting into a glorified savings account with really high interest rates and the economic outlook that we're looking at in the future, it could be a very bad time. So I just want to address why right now is probably one of the worst times to buy a home, even though I think it is usually a pretty bad time to buy a home in general. Most people, when they go to buy a house, buy the nicest and biggest possible house they can find, and they really stretch themselves. People just assume that no matter what, if you're buying a house, you're making a good investment. And this is really what I want to address. Just because you buy a house doesn't mean it's a good investment. There are tons of people out there who've purchased properties, purchased their dream home, and it's been an awful investment. It's lost value, or they spend hundreds of thousands of dollars fixing it up, and it might have still increased value, but not as much as the amount of money that you have spent fixing it up. So right now, with the economic outlook, inflation being high, interest rates being high, it is definitely the worst time to buy a home. And I always think it's a pretty bad time to buy a home, but I'll talk a little bit about right now why it might be worse than other periods. And then later I'll get into why I always think it's a bad time to buy a house. First off is high interest rates. High interest rates make your monthly payment a lot higher. And this can be a major issue for a lot of people because people will really extend themselves when it comes to their payment, and people really want that property. And right now, prices haven't really dropped to what the amount of interest rates have gone up for. So people are still looking to get into property, but they have a much higher interest rate, much higher monthly payment for the same type of house that they could have bought a year ago. Buyers are wanting what tomorrow's prices are going to be, and then sellers are wanting what yesterday's prices were. So we haven't really had that normalization yet. I don't think it's going to be a huge drop depending on where you are. In some places it will drop off pretty big, but hard to say what those places will be. Every market is market specific. So right now that's where we're at with the interest rate. So it can kind of be an interesting time period of you actually buying a property. And the other thing that goes with those high interest rates right now is that we have a crazy economic outlook. What happens when the Fed increases interest rates is it makes borrowing more expensive. So for big corporations and other players that take on a lot of debt and leverage in order to grow their business, like maybe paying for a salary for an employee, which could be you, they could have taken on debt to get that salary. So if things are going poorly, the first thing that they're going to cut is jobs. So if a recession is actually looming and there's higher interest rate, people can't actually borrow more debt, then they're going to just start cutting employees. So if you buy a house and you have this expensive mortgage, which people are typically trained to get, and you don't have any savings and you don't really know what you're doing with your money, and you assume just because you bought a house, it's a good investment, and then you get fired, well, you're pretty much screwed. And the things I'm saying right now will actually ring true throughout your entire life if you go buy a house, but it's especially more true now with high interest rates, inflation that the Fed is trying to stop, as well as the fact that you could lose your job depending on what it is, and the typical person does not have any type of savings or emergency fund in order to get through those periods of economic uncertainty. That's why I think right now in particular, it's not the best time to buy a property. They're definitely the most unaffordable because prices are still high and your monthly payment is still going to be high. But I will say one quick thing before I move on is that the idea of getting a lower monthly payment and spending more on a house is very stupid. In real estate, when you make money, it's on the purchase price that you buy the property for and the amount of value that you can get it up to. So it's all about the amount of equity that you have. The monthly payment is kind of irrelevant unless you're renting it out and getting a ton of cash flow. So don't just think about it as a monthly payment thing. It also has to do with the amount of equity and purchase price that the actual building is you're getting. But now let's get into a little bit of why you should never really buy a property. Well, you should buy a property, but why it typically is a bad time to buy a house anyway. We do all need a place to live, and a house is kind of a nice place to do that because you don't have a landlord who kind of could suck or not do the things that you want to do or maintain things. You have more control over your property and can fix those things up. So I'm not just going to blanketly say that buying a house is a bad investment. I just typically think it isn't the best investment you could make, and I think most people should change their mindset that always will say a house is a good investment, but focus on buying cash flowing assets first and then buy that dream home or that nice house that they can live in, and not necessarily worry about so much the financial stress that comes with buying a home and being able to keep up with that mortgage. Like a lot of wealthy people try to focus on is building up cash flowing assets so that they can buy liabilities. Not that I'll outrightly say that a home is a liability, but you have to pay to own it every single month, and it could go down in value. A lot of maintenance, like all of these things that we have covered. So if you focus on getting cash flowing assets first and then get that house and have those cash flowing assets cover your mortgage, then you're going to be in a much better spot than someone who has no emergency fund, someone who could get fired from their job, and someone who really extended themselves when it comes to buying that house. And I'm not just going to sit here and say you're stupid for wanting to buy a house. I will actually offer a solution which I think everybody should be doing, and right now is a fantastic time to do it. So instead of buying a house, I think you should buy a house. Those sound like the exact same thing because they are, but it depends on when you buy a house if you can utilize it as an asset or a place that you live in. And there's a good way that you can kind of do both so that you have cheap housing as well as create yourself an asset that will produce income for you, and you can be insulated from any negative economic activity. This would be known as house hacking. And the first thing that I did when I house hacked was I bought a duplex with a low money down FHA loan, lived in one unit, and I rented out the other. And the way this insulated me from any economic activity, even though I bought it in 2019, which was a good time, is that I had Section 8 tenants upstairs, so I had guaranteed rent coming in from the government, plus I had a roommate who was paying me, and my girlfriend was paying me, plus I made my own money. So there was 4 people right there, one of them being the government, who usually won't fail, or would be pretty amazing to think that they would fail, that was covering the entire mortgage, plus 3 other people. So right there, I was spreading my risk across 4 people failing, again, one of them being the government, so felt pretty good about that. And obviously that would help me a lot more than if I just had my one salary and my huge mortgage that I could barely afford anyway. And in my example, even if I didn't have the Section 8 rents, there was still another tenant with 2 people earning income. So I had across 5 people, if not Section 8 rents, being able to cover this mortgage rather than just relying on myself. Which is why I think right now is a great time to house hack, because you can insulate yourself from potentially losing your job, and you have a great place to live where you don't have to pay towards the mortgage. All of those people who were paying me rent at the time were covering the entirety of my mortgage, so I no longer had a housing payment, and I could save a lot more money every single month. Another reason why I think it's a great time right now to buy a house hack is because of rising interest rates. Now, even at the beginning, I said that was a bad thing because it will increase your monthly payment. Rents have also increased quite a bit, and more people are being pushed out of the housing market, which means they have to rent, which means there's going to be demand for you to rent out your apartment at that actual rent level that will make it make sense for your purchase price. So if the numbers make sense from a cash flow perspective, meaning you're receiving enough rent for the amount of mortgage that you're getting, then this can be a fantastic investment. The other thing that higher interest rates are going to do is make more people nervous about buying, and there's going to be less demand. So if there's less demand, that means you can offer less on a property. I'm always offering less on properties because the worst thing the person can do is say no, and that's what I usually tell people to do, is just offer less money. And right now, buyers have a lot of power in that regard because they can just offer less money, and likely someone might accept because they don't want to be in the market for too long and then their house keeps dropping and dropping. So if you can buy a house hack like a duplex, 3-family, 4-family, live in one unit, rent out the rest, where your mortgage is covered, and potentially not even your entire mortgage, you just have really subsidized housing, and then when you move out, you know you have a cash flowing rental, that is just a massive win. Another awesome thing about that is that in a few years, potentially because you bought a house hack that needs a bit of repairs, you renovate it to increase its value so that you're feeling good about the amount of equity that you have. You could refinance into a lower interest rate once they inevitably inevitably do come down, they actually already have come down in the last couple of months or so from their peaks, or maybe last month or so from their peak, so we can see that trend that they will eventually come down again, the numbers will start to look even better, and people are just nervous to buy, so you have less competition to get in and actually get yourself that property. And now you could do this a couple of times, and then once you have enough income from these house hacks or rental properties that you have, go ahead and then buy your dream home. I own over $3.5 million worth of real estate, and I plan on continuing to buy more real estate that isn't a primary dream home until I feel as though it makes more sense. I have enough cash flow that could cover a cool mortgage for a cool house, but I don't want to do that because right now I'm in growth mode. I want to continue to buy more real estate that will bring in more income so I can feel better and better about buying what I kind of view as a liability for my primary home. So if you want to learn more about house hacking and how you can build your wealth the easiest way possible with that low 3.5% down payment, go ahead, click the link below. I run an awesome mentorship program where you can learn all about buying your first rental property, and you can book a call with me if you check out that link there. And if you guys like that video, I'd really appreciate it if you haven't already done so. Hit that like button, make it blue, and subscribe if you want to learn more about investing in real estate. I also make a lot of videos on TikTok as well as Instagram, and I'd really appreciate it if you would follow me there as well. So thanks again for watching, and more wealth is coming your way.